You've been conditioned to believe that the ultimate game in finance is hoarding millions of frequent flyer miles to score a first-class ticket to Dubai. But while you obsess over welcome bonuses and spending multipliers, you're bleeding money by ignoring the fine print. Behind those flashy marketing campaigns lie shadow benefits, financial safety nets worth thousands of dollars annually that banks quietly hope you never actually use. This isn't another generic breakdown of cashback categories or airport lounge access. We're going deep into the structural advantages embedded in top-tier credit agreements. As digital nomads, modern investors, and global citizens, your exposure to risk, lost luggage, shattered technology, delayed flights, is exponentially higher than the average person. Banks know this, which is why they bury their most valuable protective perks deep within their terms and conditions. They understand that a vast majority of consumers will never read the fine print, leaving millions of dollars in unclaimed benefits on the table every single year. Today we're decoding the secret utility of your plastic. We'll dissect how to legally force your issuer to refund a non-refundable purchase, how to turn a disastrous travel delay into a luxury staycation, and how to bypass the predatory insurance models shoved in your face by rental car agencies and electronics retailers. By the end of this session, you'll look at your wallet not just as a tool for spending, but as an ironclad insurance portfolio designed to protect your wealth from unexpected shocks. Let's tear into the hidden mechanics of credit card perks. What if I told you that paying for Apple Care or carrier insurance is essentially setting your wealth on fire? Let's run a thought experiment. Imagine making $100,000 a year working from a beach club in Bali. You're closing a major client deal on your phone. You stand up, and your device slips, shattering against the concrete before sliding into the saltwater pool. A total loss. Normally, you'd be forced to drop $1,500 on a brand new device out of pocket, disrupting your cash flow and causing unnecessary stress. But if you've been strategically paying your monthly cellular bill with the right premium credit card, you're shielded. Many top-tier cards offer complimentary cell phone protection that covers theft or accidental damage. You file a claim, pay a trivial deductible of perhaps $50, and the bank reimburses you up to $800 or even $1,000 per claim. The mechanics are simple but strict. The coverage only activates if the specific phone line is tied to the monthly bill paid by that exact card. If you prepay for an entire year using a different payment method, you void the protection. By leveraging this hidden perk month after month, you eliminate the need for third-party insurance, freeing up hundreds of dollars annually to deploy into actual income-generating assets or index funds. It's a seamless way to protect your primary communication tool without paying extra premiums. Retailers dictate return policies, but your credit card can legally override them. Let's picture this scenario. You're visiting Milan and purchase a bespoke $3,000 leather jacket.
You fly back to New York, try it on in front of your home mirror, and realize the fit is wrong. You call the boutique, but they tell you all international sales are final and they won't accept a return under any circumstances. Enter return protection.
Certain high-end cards guarantee that if a merchant refuses to take an item back within 90 days of purchase, the credit card issuer will refund you directly. They'll ask you to mail the item to their processing center, and the money drops right back into your account, bypassing the stubborn retailer. But what if the jacket isn't the wrong size, but instead gets stolen from your hotel room while you're out at dinner? That's where purchase protection steps in. Purchase protection acts as a short-term ironclad insurance policy against accidental damage or theft for the first 90 to 120 days of ownership. If a thief swipes your newly purchased luxury good, or if you accidentally rip it on a sharp doorframe, the bank will repair, replace, or reimburse you for the full amount. You're turning the bank into a free underwriter for every major transaction you make. This removes the anxiety of carrying expensive new gear through crowded airports or unfamiliar cities, ensuring your capital is protected long after you leave the checkout counter. The airline industry views your time as worthless, but your credit card values it at hundreds of dollars per day. Imagine you're finishing a real estate scouting trip in Tokyo and a sudden typhoon grounds all outbound flights for 48 hours. The airline shrugs, hands you a voucher for a soggy sandwich, and expects you to sleep on the terminal floor alongside thousands of other stranded travelers. If you booked your flight with a premium travel card, your reality looks different. Trip delay insurance triggers when your travel is delayed by more than 6 to 12 hours or requires an overnight stay. Instead of fighting for a patch of carpet at the departure gate, you pull out your phone. Book a 5-star hotel room in downtown Tokyo, reserve a table for a high-end sushi dinner, and purchase a fresh change of clothes. You keep all the receipts, file the claim, and the credit card company reimburses you up to $500 per ticket. This safety net also scales to complete cancellations. If you get sick before a non-refundable vacation, or if a severe weather event destroys your destination, trip cancellation insurance steps in to refund the flights, the prepaid luxury villas, and the non-refundable excursions. You're transferring the massive financial liability of unpredictable global travel onto the balance sheet of your financial institution. They absorb the financial impact, allowing you to rebook your life without taking a loss. Planned obsolescence is a silent tax on the modern consumer, but you hold the ultimate loophole right in your pocket. Let's walk through another thought experiment. Imagine running a lucrative, decentralized finance consultancy while traveling through South America. Your entire operation relies on a custom-built $4,000 laptop. Exactly 2 weeks after the manufacturer's rigid 1-year warranty expires, the motherboard fries. You take it to a certified repair shop and they quote you $2,000 to fix it. The manufacturer refuses to help, pointing to the expired contract. If you bought that machine with cash or a debit card, you're absorbing a catastrophic hit to your business overhead. However, if you swiped a premium credit card for the initial purchase, you're utilizing the extended warranty perk. This hidden mechanism adds an entire additional year of warranty coverage to eligible purchases that have an original manufacturer warranty of 3 years or less. The credit card issuer reviews the repair estimate and simply cuts you a check for the repair costs, or in some cases, replaces the unit. By understanding and deploying this mechanic, you never have to fall for the aggressive upsells at the electronics checkout counter again. You let the bank carry the statistical risk of mechanical failure, preserving your operational capital for true investments. The most dangerous financial signature you can make on vacation is accepting the rental agency's collision damage waiver. Imagine driving through the narrow, winding cliffside roads of the Amalfi Coast in a rented luxury sedan. A tourist bus takes a sharp corner, scraping the left side of your vehicle before speeding off into the distance. When you return the car, the agency hands you a repair bill for $5,000. Most basic credit cards offer secondary rental coverage, meaning they force you to file a claim with your personal auto insurance back home first before they pay a single cent. This guarantees your personal premiums will skyrocket for the next 5 years, costing you more over time than the repair itself. But top-tier cards provide primary rental coverage. This distinction is critical for anyone managing serious wealth. Primary coverage means the credit card company steps into the line of fire. They handle the claim from the first dollar, bypassing your personal auto insurance. To trigger this firewall, you simply decline the rental company's daily insurance fee and pay for the rental with your eligible card. You save $20 to $30 a day at the counter and erect a bulletproof barrier between your personal net worth and the chaotic variables of international driving. The bank fights the rental agency, and you walk away unscathed. Extracting true wealth from your credit cards isn't about chasing the short-lived dopamine hit of accumulating arbitrary digital points. It's about actively transferring your daily liabilities, device damage, retail theft, travel disruptions, and mechanical failures onto the infinite balance sheets of multinational banks. True financial strategy requires you to stop viewing your wallet as a basic payment mechanism and start wielding it as a comprehensive asset protection portfolio. When you master these hidden terms and conditions, you stop paying for overlapping insurance policies out of pocket and start letting the financial institutions underwrite your lifestyle. But having the right perks is only half the equation. You must assemble them into a cohesive framework that works globally without crushing you in exorbitant annual fees. To build the absolute perfect wallet that minimizes fees while maximizing these exact hidden protections, click on the video on your screen right now titled The Ultimate Global Travel Card Setup for 2026. You'll learn the exact sequence of cards to carry to make your financial life bulletproof anywhere on Earth. See you there.